Hi, welcome. Mary Ellen McGonagle here, Senior Managing Director of Stocks for Simpler, and this is your weekly Edge show for January 29th. Let's dig right in. First up today, I'm going to share with you some of the more impactful news items that drove price action last week. It was a very volatile period as we had intraday swings ranging from 2 to 3%. And a lot going on beneath that as well, because we are going to go ahead with that and take a look at not only where we closed the week, but take a look at some of the sectors that experienced significant moves and why. Also, viewer question of the week, and this is going to be all about earnings. We had a major players report last week, and I'm going to share with you 3 highly relevant names and also what their results, as well as the market's action, are telling us about the markets at this time. So let's take a look at some of those news items. And first up is the fact that the Federal Reserve had their January meeting all about their potential shift in their monetary policy. And on Wednesday, they came out with the commentary from that meeting, and it really did rock the markets. At that time, markets were looking for some sort of really succinct guidance as to how they would move forward with interest rate hikes and their bond buying. And instead, the Fed made it clear that they are going to be very fluid with their decisions. It's going to be on a month-by-month basis just because of this unprecedented period that we're in. And that really wasn't what the market wanted to hear, or certainly investors. They were looking for more in the way of guidance. So we'll take a look at the impact of that on Wednesday. And then also we did get some consumer numbers last week, in particular consumer spending in December, as well as consumer confidence in January. Both faltered. High inflation is a real concern. We're at a 40-year high. So I'll talk about what those particular reports are impacting. And then also taking a look here at that volatility index. I talked about those big intraday swings that we had last week. And on Monday, we saw this volatility, better known as the fear index, spiking up to this 39 level in anticipation of that Wednesday meeting. A little bit of a pickup on Wednesday, but take a look. We did pull back into the close for the week, and I will share with you some of the reasons for that. And it is very good to see volatility pulling back. We'll see if we can remain on track. These other prior spikes here, this is that Black Friday crash, if you will, in the face of Omicron being discovered, and we were able to recover from that rather quickly. So we're going to keep an eye on that volatility as a way to gauge investor sentiment. So let's take a look. Where did the markets close for the week? And then from there, take a look at some of the underlying group and sector movements. First up here, we're taking a look at the S&P 500. This is a weekly price chart. I'm doing this so that I can provide you a bit more in the way of historical precedent as well as current price action. So first up, I'm going to share with you some of the dynamics that took place during the 2 most recent bear markets, that fall 2018 falter, as well as the pandemic-induced 2020 bear market. So first up, the index did on this weekly chart break below this 40-week or 200-day simple moving average, and that was in line with this RSI. This is a momentum indicator, relative strength indicator, and it broke below this 50 into negative territory simultaneously with the break below this 40-week. Also stochastics, these are a faster moving momentum indicator, and they also turned negative below this net neutral here. So this in turn signaled a bear market. Same with that 2020 period, the break below the 40-week, the RSI, and the stochastics turning negative. So take a look here at current price action. Last week we did get that similar break below this. We also had the stochastics turning negative and in line with anticipation of a potential bear market. This week we were able to close the week up slightly on the S&P, up about 0.5%. Midweek we were down almost 1.5%. So that's certainly encouraging. We got nice volume characteristics here. So continuing to keep an eye out on this longer term potential prognosis. And of course, equally important is to identify and know what to be on the lookout for an eventual downtrend reversal. So going back to this 2018 bear, we can see the stochastics turned positive above this net neutral. And then also in conjunction with that, we had the RSI turning. And this weekly chart is going to provide you a longer term outlook view. And then we can also see with that when the S&P 500 broke above this red. This is a 10-week moving average, your 50-day. So if you line that up, all of this acted simultaneously, which gave us that signal that the markets were bullish again. So let's from here take a look at the underlying sectors in the S&P 500. And this is a 2-month daily price chart view. I like to add this RSI. It's a relative strength indicator, and then sort these sectors in descending order so that I can see on this upper quartile which areas are showing relative strength, and then down here those areas that you are well advised to generally stay away from. So first up, we can see energy up here, and it had another very big week, up 5%. One of the reasons is because of the tension taking place between Russia and Ukraine. There is fear that Russia may put sanctions against an already squeezed European energy market, and that in turn has pushed up energy stocks, as well as, we'll get into this, the price of crude oil. So let's take a look at another group up here in the forefront, and that is consumer staples. Now the group overall this week did close the week down just a little. However, this late week rally here that we saw is holding the group up above that 50-day simple moving average, with your RSI now turning positive. A lot of high dividend stocks in here. It is an interesting area for those that need to be fully invested, and then also seeking higher yielding names in this currently volatile period. From here, we can take a look at another industry group that had a very interesting period this week, certainly into the close. This is technology, and many of you may know, you may be feeling the pain as these tech stocks really peaked in price back here and have fallen off rather sharply. But we did get a nice Friday close, up 4% back above this 10-day moving average. Still a little early. I will need to see some more work done to turn bullish, but we can share as I get to those companies that reported earnings. This move in tech will make more sense. And then from here, of course, areas that you are better served to not be invested in. This is consumer discretionary XLY. We can see the precipitous drop here. In the earlier slide, I shared with you that consumer sentiment and spending both have fallen. Also, retail sales in December has fallen as well, and it is all about that high inflation. These higher prices are just too much for the consumer. And then in addition, the Omicron variant spread has increased certainly fear and a pullback of spending. So from here, I'm going to share some sub-industry groupings that will really give us a little more in the way of intel. These are industry groups that really tend to drive other areas of the market. So again, a 2-month daily price chart view, RSI. So let's take a look. No big surprise here as far as one of the areas that was up quite a bit this week. This is Brent. Crude oil pricing now up above 90. That's very, very significant. A lot of these energy companies really will fare well with an energy price or oil per barrel price above 70. And now up at 90, certainly due to help their bottom lines even more. And then also, let's go ahead back because I want to share with you some areas that are not faring well, and that is semiconductors. They were down almost 4%, a break below this 200-day simple moving average. And this too is all about earnings reports, a number of well-known companies that are not guiding higher into next year. We'll get into that. One bright spot potentially here is software IGV. I, of course, am very wed to this area because I focus on high growth, faster moving stocks. And certainly software was an area that had been doing quite well until falling off here in the face of higher inflation, higher interest rates. But it is having certainly volatile, but it looking for this area to eventually bottom as we come out of this oversold position. When that takes place, super exciting. Lots of profit to be had there once that area potentially does begin to turn positive. So we'll be keeping a very close eye on that. So from here, let's go ahead and take a look at some of those companies that reported this week. I'm going to share with you 4 very well-known bellwether stocks that came out with their earnings. And in addition to their numbers, we're going to take a look at how investors responded. So first up is Apple. They did report today. The company came out with record fourth quarter earnings. Despite supply chain slowdowns, iPhone sales were up 9%. And let's take a look. The stock rallied 7% on the news. Now, what I am sharing with you here is the company's prior quarterly release and how the stock responded. Of course, we were in a different market environment, so we were able to see that nice bullish uptrend materialize, but it can be used as guidance going forward for Apple as the stock was able to perform well. I showed you that technology sector chart earlier that had really deteriorated, but Apple was able to hold and withstand that downward pressure, so we will keep an eye on that. But the good news here is that Apple's management guided their earnings estimates higher for this year, which in turn is why the stock experienced a nice sharp rally. Let's take a look at another company that came out with their earnings earlier in the week, and this is Tesla. And again, just sharing the response in that prior period, but let's take a look at what occurred. They too came out with a record fourth quarter, but unfortunately the company announced that they will not be introducing any new models for this year in the face of supply chain issues. So we can see a very pronounced difference in investor response. The stock sold off. So really what we can see is that management's guiding their estimates into this year are really quite relevant. Let's take a look at another large company that announced their earnings, and this is Microsoft. And Microsoft came out with very good numbers. The company did guide their estimates higher, so we can see we have this potential downtrend reversal that's beginning to take shape. This MACD black line poised to cross up above this red, and the RSI just now poised to turn positive. So it's looking really attractive in a very otherwise dismal market. But again, the relevance here is the fact that the company not only came out with very strong numbers, management also guided higher into this year. So very, very important metric that's being very closely paid attention to. Last up, we will take a look at Caterpillar, a bellwether among industrial stocks. And the company came out prior to their earnings. They were looking to potentially be forming a handle on this cup formation. But unfortunately, the company did report their numbers today and they dropped. They closed down 5%. A couple of reasons here. They did have big earnings and sales that were ahead of estimates. But again, that metric going forward. Management talked about demand from China dropping this year, and also they cited supply chain issues as putting pressure on their profit margins, in essence guiding lower for the year, and we can see this huge drop on very heavy volume. So in essence, earnings as a driver, but most importantly, what is management saying about their estimates going into the remainder of this year? These big companies will move the markets as we go into next week. Another big week for earnings. We have Amazon, Google, Meta, all due to report their earnings. So we're going to continue to stay on top of these dynamics and see how they impact the broader markets. Have a great weekend. I look forward to seeing you here next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.